Good morning. Happy Monday. We are starting the week with the market pulling back just slightly in the pre-market following a really good rally on Friday. The stock market really rallied around some of the biggest stocks, and even some small caps really had a great day. Um, just some big gainers. I think one of the big gainers was Zoom. It was up like 12%. I know Oscar Health was up 9%, but some big caps like Google, 3.17. Wow. Amazon, 3.1%. Tesla, 6%. These are big gains, and the market flourished. So maybe giving up just a little bit of that rally, and maybe some profit takers are going to cash out and see what happens next. This week is a big week with NVIDIA earnings. That's going to be the big event on Wednesday. And on this live stream, I'm joined by Daryl. How you doing, Daryl?
Doing wonderful, Victor. Good to be here.
It's great to have you. And Daryl's going to join me on a watch party we're going to host on Wednesday, right when the earnings drop for NVIDIA at 4 p.m. Eastern. And we will get our hands on the earnings release and analyze it real time, give you our impression of what the earnings had, see how the market reacts. I think the NVIDIA stock, I mean, I've been wrong on many occasions with NVIDIA. It's been incredible. The company's done great. And I just don't know what to predict on Wednesday. They could announce great earnings and the market sells off. They can announce poor earnings and the market rallies. I don't know what's going to happen. I'm not an investor in NVIDIA, but any guesses as to what you're going to see on Wednesday with regard to NVIDIA?
Well, I look back at the previous three earnings, and the upside was not nearly as big as the downside. Let me look at this again. Yeah, so back in November, they only popped up about 0.53% on their announcement. And then in February, well, in January, they had the DeepSeek issue. So that was a drop of 16.97%. And that was basically on the need for, high performance GPUs if it could be done cheaper. But they quickly recovered from that back up to about 145, and then they announced on so the 27th was the day following the announcement. They dropped about 8.48% on that day, and then they completely declined to about 86 or so on April the 7th, which we wouldn't have been able to see any of this over here, but that was really a great time to buy because they're up about 98%.
Incredible.
From that price right now.
And
then on May the 29th, after their report, they were up 3.25%. So I don't expect a huge upside, and the risk is always there for downside if there's any problems with their earnings announcement on Wednesday.
Yeah, and it's not necessarily, I mean, we're kind of we're going into uncharted territory with a company that has a market cap of $4,340,000,000,000. That's a lot of capital. So when I put on my kind of thinking hat on, it's like, okay, let's chart the path for NVIDIA to double its stock price. We need investors to come up with $4.3 trillion to buy NVIDIA stock. I mean, that's really hard. Where you look at these tiny caps, they have a 1 billion market cap. Can they go to 2 billion? We need $1 billion of capital from investors to get it from 1 to 2. Well, that seems like easy compared to this, which is, man, you're going to need to get some big investors, or you're going to need to double your retail investors in the stock. So that's one of the thoughts that I have when I look at such a big cap. It's like, wow, I mean, you look at like Meta is less than 2 trillion. It's like, well, can I see Meta get into 4 trillion? Yeah, I could see that. It's going to be hard. Might take 3 years, might take 4, but I could see that path. Can I see NVIDIA at 8.6 trillion? Man, it's a tough one. So we'll see. We'll see what happens.
Yeah, the accumulation line right now is at a 52-week high for NVIDIA.
Really?
Yeah.
So what does that tell you when accumulation is that high? Is that a bullish sign or a bearish sign?
Oh, I consider for NVIDIA that this is bullish. If we look at the money flow, the accumulation distribution line is just a cumulative value of money flow. So if you look at money flow over the last year, it hasn't had many negative drawbacks in comparison to the positive money flow.
Mm-hmm.
Even from this in April, I mean, it barely got into bearish territory. So we've had positive money flow since the end of June, and it is still very bullish territory at the moment.
Yep. Incredible. Yeah, this one, it's beginning to remind me of Apple, because Apple became a very comfortable investment for so many. And while, Apple didn't grow for 3 years, it was like, wait, they're not growing. And they have a static product portfolio. They keep upgrading the iPhone, but the upgrades were just a slight increase in feature and function. And investors were like, we don't care. We like Apple. It's comfortable, feels right. They have great products. So it's beginning to feel like that for NVIDIA. Hey, we don't care that if they stop growing, maybe that becomes a problem. Right now, NVIDIA is the most sought after stock, and I want to own it.
Well, the growth is projected to slow down over the next 3 years. So they grew at 288% in 2024, 131% in 2025, their fiscal year. 2026, it's going to slow down to 48%, according to the analyst, 36% for the following year, and 16%. So things are slowing down from this AI peak, but this is 48% of the numbers that you were just talking about a few minutes ago, which are huge.
Yeah. Yeah. Again, like just thinking about like the semiconductor market and who the customer is, right? The customer is a big corporation, a big, usually publicly traded corporation. Maybe at some point it'll be governments. So these are big decisions that take big dollars because they have to fund a big data center build. And I think right now the AI businesses are not being held to return on investment accountability. Like, okay, you spent, $2 billion back in 2023. Show me the business that you built, and what kind of revenues do you have? What kind of gross margins? Where's that business going? And that's where it's a little bit of, remember that movie Field of Dreams with Kevin Costner, where he built that baseball field in the middle of Iowa in a cornfield. And the concept was build it, and these ghosts of legendary baseball players would come.
Right.
And so here it's like, a little bit of AI ghost. Build your AI infrastructure, build an AI business, and either for some businesses, revenue will come, or for businesses that are going to receive efficiency benefits, you'll be able to cut your cost. Like, hey, I used to spend $100 million in customer service. Now I only spend 75. That's really good margin down to the bottom line. I think we're in 2025, and my rational mind is looking for those stories. I want to see, back to the movie, shoeless Joe Jackson come out of the cornfield and play center field. I want to see real benefits from AI so that I could say, yeah, look, the massive investment in AI is going to reward the companies that were leading the herd, so to speak, because it could be the opposite, which is, hey, it was too soon. The benefits are not really there just yet. Maybe they will be in 5-10 years, but we'll see. So, did you have anything else on NVIDIA? I'll show my valuation once you're done.
The only other thing that I might show is the weekly trend chart. So this is over 5 years. And this just shows how the price is performing in relation to 3 sets of moving averages. This first one is a long-term average, and it's only underperformed its long-term average for just a couple of weeks this year. 2022 in general was an underperforming year, but nearly the whole stock market was in that position in 2022. So for 2023 and 2024 and almost all of 2025 so far, they've been positive of their longer term averages. And then we can look at their medium term averages, which you can think of as being, a quarter or so, and this is more like a year. They're also outperforming those medium term averages.
Mm-hmm.
There has been a slight decrease recently, but they're still outperforming. And then the short term, they're also outperforming those short term averages. They've come down to just about the midline. So what happens this week and the next week or two is going to determine whether this stays in positive territory or crosses over and starts underperforming in the short term. So that's another interesting view. And then I mentioned several times in the past that the NVIDIA breakouts have been pretty powerful. So I bought about right here. That was my first purchase, and that was on a breakout. And you can see this run that it's had.
Mm-hmm.
And then we're in a breakout again right now. So it had leveled out around the 144 price, and now it's broken out above that and running higher. So these breakouts can be pretty powerful to follow. So that's all I have. Let's take a look at your valuation.
Sounds good. So I'm getting Bill ready. Let me just do a little typing here. We have Brishi on the line, so to speak, and he asked us to cover Bill.com. So I'll get that ready and park it for now. So NVIDIA, the valuation, I have a couple growth rates with a little bit of a contraction for the cash flow. It's really hard to price it on cash because it's just such a big market cap. I can get up to about 2 trillion, but no further. So it's priced high based on cash. When you look at earnings per share, you can substantiate it, but that's not how I invest. That's not how a lot of long-term and successful investors, invest. They look at cash flows. This is more important than this number. This is a good number that the street talks about all day long because the company reports earnings per share, but cash is where the value really is generated for a business long term. So overall, it's a 35% premium you're paying for NVIDIA. Again, I could see this stock holding its stock price for a long time, like Apple did so. And, the market's going to do what the market's going to do. It doesn't, in some cases, it doesn't care about these kinds of fundamentals. If you look at like NVIDIA, you look at Broadcom, you look at Palantir, the market loves those stories. The AI story, that's the story of 2025, 2024, and 2023. And the market's going to keep investing in that story until it doesn't. And then we'll see what's next. So good stuff. Good stuff. Well, we'll reconvene on NVIDIA on Wednesday and see what they have to say. We'll see how the market reacts. And let's take a look at Bill. It's Brishi is a member of the channel, and he is asking about Bill.com. We'll get this ready. This is not completed, but let me take a look at their fundamentals first. They're going to announce on Wednesday, along with NVIDIA, and rather than being a $4.3 trillion market cap, this is a $4.3 billion market cap. So this is like NVIDIA is 1,000 times bigger than this little company. And their stock price has really been punished to some extent. It flew up toward the end of 2024, and then it's really come down to $42 per share. Forward P is 20. That looks pretty reasonable. You're only paying 4 times revenue for a software company. Analysts think it's discounted. The company is growing, and the growth wasn't a giant surprise, right? As you get bigger, these numbers are harder to grow percentage-wise at the same rate you were growing before. So for it to go kind of, hey, the percentage is kind of slowing down. That's rational. That's like, okay, the number we're growing off of, it's getting bigger. So it's going to be harder to maintain that percentage growth. Okay, that's rational. That looks okay. I like their gross profit numbers, really high gross profit. And right now they're relatively small, and they're going to get bigger over time if they keep growing at 10, 15% per year. So this is going to end up falling into that profit margin. Okay. I'm sure that right now they're spending a lot of money acquiring customers because they're out there competing for customers in the small business space. When we look at Bill.com, this is a business software for smaller businesses. And, this is probably competing against like QuickBooks and maybe Monday.com. And this is more in the spend area. Okay. So they're focused on like spend and helping you manage your spend as a business, right? So spend expense, budgets, they got a mobile app. Okay. And we've got, different industry plays. Okay, cool. So that's what they do, and they've been growing at a good clip. Let me take a look at their valuation, and we'll do a quick valuation on them and see if they're priced at a premium or at a discount. I'm gonna open up a different screen and then update the numbers.
If you want to do that in the background, I can talk about the charts for a moment. It's up to
Yeah,
you.
that's a good idea.
Where you want to go.
Let's do that. Why don't you show us the charts and I'll be updating the valuation.
Okay. So I'm going to step back 5 years, still using daily data. But one of the things that I see here depends on where you draw this trend line. They are definitely in a downtrend and have been since 2021. They would need to break out above about a $75 level to reverse this downtrend. If we draw the line there, if we draw the line at a maybe slightly different, this actually touches more points, then they are on the verge of a breakout at this point. So there are more points that are touching the trend line here than the original one that I drew, but it's definitely in a downtrend and has not yet reversed that downtrend.
Yeah, and I think part of the downtrend, at least, the perception that I'm picking up is AI is going to disrupt a lot of software companies that, hey, you're not going to need the software if AI is going to do everything. But I'm not sure how much AI is going to do. So I'm not going to argue that AI is going to make things better. I'm in agreement on that one. It's just there's some things that is AI going to go out and meet with your customer? No, you're still going to have your sales reps do that. Okay, they're still going to have to do their expense reports and manage their corporate credit cards and so forth. So Bill.com still has a use case that the market is, the economy is going to appreciate. So that's a story they've been dealing with, and maybe a part of the explanation as to why it's been selling off. When we look at the fundamentals of the company, the cash flows are really good and they're growing. They continue to grow. This is the software businesses. Software businesses are very profitable. 85% margins, right, are very good. That's what I like seeing, is good profitable businesses that are gonna eventually be worth a lot more. And this is one of them. If they keep growing, I mean, this is just going to continue to, in my mind, become more valuable. Their earnings per share is $2.22. I'm going to give them a 24 PE. They're growing that. So any way I look at it, this is a discounted stock. It's not a fundamental question like, hey, this is a good company. It'd be worth a lot eventually. It's just, when's the market going to start buying into software companies again? Because I could show you Adobe's, numbers look good. Salesforce looks good. These are great businesses. These guys have proven themselves to be very important in the economy. But the market's like, hey, we want to see what AI is going to do to these businesses. And I think eventually software companies are going to reward investors. I think software companies are going to eventually be recognized, start getting acquired, because other bigger companies are going to say, hey, I want to buy Bill.com. I like their growth. I like their margins. I want to be an owner of that business and put it into our bigger corporation. So Brushy, that's Bill Holdings. We'll see how they announce. I think they're going to do fine because the economy's been doing well. And I think it'd be, for me, looking at it as an investment, it wouldn't be a bad idea to own it and hold it for a while. I've been buying into software. I own probably about 8 different software companies. Where I'm buying is like I'm buying into CRM. I think that's going to be a good play, but I'm buying all these small caps as well. So I figure eventually these things are going to be acquired by companies like Microsoft and Google. Other businesses like SAP will acquire some of these businesses that they like. So that is Bill. Let me read the comments real quick. Saeed, good morning. Hope you're having a good day. And Sam, great to see you. Hopefully you're having a very good day on a Monday. And all right, let's talk about, let me make a quick note on my watch list that I need to add a few details for Bill. And then we can move on. This is PDD. I believe it's Pinduoduo. This is a Chinese company. It's the owner of Temu. I don't order much online anymore. I order like all the essentials, right? But Temu, I think, was a big, like, popular thing that people are buying. A lot of stuff that was not very high quality, kind of like single use kind of stuff. But it became kind of a high growth engine for them. So this is the owner of Temu, Pinduoduo, and they announced earnings today. The stock is selling off. So let's take a look at Pinduoduo and what's going on with this company. Is it an opportunity? I would say that Chinese stocks, if I'm not mistaken, are doing quite well. Let's look at the Hong Kong exchange here. Year to date's up 31%. S&P's up about 10, right? So this thing's doing like 3x the S&P. If we look at the Shanghai, which is like only, I believe, we can buy things in the US, we can buy stocks that are listed on the Hong Kong Stock Exchange, but we can't buy things on the Shanghai. But these guys are, it's doing quite well. Only Chinese nationals, I believe, can buy these stocks. But most of the bigger companies are listed in Hong Kong. So this one is doing really well. So having said that, looking at Pinduoduo, is it a decent investment? I don't know. I haven't looked at it in a little while. Year to date, man, you've been on a roller coaster ride. Wow, look at that. But it is on an upward path. And for the 1 year, it's not on an upward path. It's down. 5 year, it did not get the job done. Took you for a ride, though. So this one here, let's take a look at the fundamentals. And this is market cap. This is in US dollars, $180 billion. PEs look really reasonable. 13.7, 12.58. Analysts think it's a buy. And looking at their revenue, and it looks like they are including the quarter that was just announced. 19%. It has fallen. I think there was some pushback on the whole Temu model. When they were selling into the US, they were using this exception that if you're shipping something from China to the US, and it's less than a certain dollar value, it's kind of tariff free. It's like, yeah, we don't want to deal with that.
So de minimis rule.
Temu was exploiting that And a lot of Americans were like, yeah, cool, this is fun. I could buy, I could buy a TV for like $5 or something ridiculous like that. That's why they were fun, is people were buying products on there. But their revenue's slowing down. And the revenue, this is in the Chinese currency, so we got to take this times 0.14. But even after doing so, that's a pretty good revenue clip. It's about 16 billion per year, and they're growing at 7%. Actually, that's 14 billion per quarter, so it'd be closer to 60 billion per year. So that's pretty darn good. It's a pretty good sized business. And let's look at their overall cash flow. This is about call it 13 billion in free cash flow, which is pretty darn good for a e-commerce company. It's really good. I think it's better than Amazon. So these are pretty good numbers. Earnings per share is there. I think the growth is what's causing the stock to sell off. I mean, the growth is slowing down, so I think investors are cautious about it. Hey, what's going on? So 12 analysts cover the stock, and they think there's a small discount available on the stock. Let's look at the forecast here. They're expected to continue to grow. This year, they are going to slow down a bit and then start to grow. The one thing I would say is the Chinese economy, they had a big, COVID was a big disruptor, obviously. And here we kind of dealt with it in, let's call it 2020, 2021. And then we tried to get back into an economy that was going to kind of represent what we used to do before COVID. Well, China didn't do that. They were like, they would have one case of COVID pop up, they would like shut down entire factories, entire industries. They were like, you're shutting that down. So for 2 years, they had like really disruptive actions. And that was 22, 23. Now they're finally like, okay, no more COVID. At least if you get COVID nowadays, it's not that bad. It's like a flu. I don't want to be insensitive. So there are some people with medical conditions that it would be a bigger factor. But, I got COVID a year ago, and it was kind of between a bad cold and a flu. It wasn't even as bad as some of the flus I've gotten. So that was, that's kind of like not as harmful anymore. So Pinduoduo and Chinese stocks. Now, I don't invest a whole lot in China. I own Alibaba, Futu, and ETF. And part of the reason is the big picture, right? Like China's an economic superpower. The US is an economic superpower, right? But China, boy, they're doing a lot of things that are getting the job done. You look at EVs, just about all batteries that go into EVs, whether it's a Tesla or it's a GM product or it's a Japanese product, those batteries are made in China. That's where the technology is coming from, and that's where they're making them. That's a big, big business now. And Pinduoduo is going to distribute to the U.S., but they're also going to distribute within the Asian, region. And I think that's where, I want to be an investor in a business that's going to sell within the Asian region, because that region continues to grow. Their GDP growth is faster than ours. So that's my reason to invest in China. Let me turn it over to you to see the charts, and I'm going to update my valuation on Pinduoduo, and then we'll come back to my screen.
Yeah, I look back 5 years and it looks like their all-time high was around 212. And they're currently trading at 127. There is a slight pullback compared to Friday, but that's not terribly surprising. They're trading about their highs that we saw in February and then again in March. And then we had the pullback related to the tariff announcements. They do have a positive RSI currently sitting above 70, which means it's overbought at this moment. The PPO is above the midline, so that's bullish, and they've been bullish since about the 17th of July. The relative strength and relative momentum looks to be just slightly better than the S&P 500. Their accumulation is actually in distribution since May 27th. Slightly. Money flow is currently negative, and they have underperformed the S&P 500, underperformed discretionary, underperformed their industry group, which is broadline retailers, same one that Amazon is in. And then the industry group as a whole is outperforming. So price action looks good at the moment, but it looks like an underperformer to me overall.
Yeah, I think so. And, I've stayed away from PDD. I've invested in Alibaba. I'm glad I did so. Alibaba's done well. But I recognize that this one's just so darn volatile. It is discounted, and I'm using, maybe I could change this to a 10, a discount rate of 10%. Once I put all the numbers together, it's a discounted stock. If you just played or looked at fundamentals and you looked at this business, you're like, this is a good business. They're growing their top line. They're profitable, generating cash, generating good earnings per share. And they're discounted by 47%. But investing in China, right, is not the most comfortable thing for all investors. I want to invest a little bit there, part of my portfolio. And it's so far so good. My Alibaba stock's done great. My Futu stock's done fabulous, like doubled my money just in 2025. So I'm going to cover those stocks. I'm working on a best and worst stocks in China video. It'll probably come out late today, maybe tomorrow. And Pinduoduo being there, I'm probably going to cover 12 to 14 stocks because I wanted to cover a good breadth of stocks in China just to kind of give examples out there. Futu being there, Alibaba will be in there, and you'll see how Futu's a lot like Robinhood. Robinhood's done great from a stock investing perspective. So PDD is out there. And we've got good audience today. Thanks, everybody. Thanks for joining us on a Monday. Daryl, let me turn it back to you, or let me look at the markets and see what the heat map is telling us here. Whoa. A little bit of green. And looks like Google is keeping. So Google had a really good day on Friday. I heard Google, the whole decision on the antitrust stuff is coming up, right? It's supposed to, the court is supposed to make a decision in late August. Guess what? This is as late as August as we can get. After this week, there's no more August left. So what the courts have been saying is, okay, the remedies may be, hey, you guys have to stop paying Apple $20 billion to be the default search engine in iPhone. And you have to stop paying Samsung, I think, a couple $1 billion to be the default search engine in their devices. That's one of the remedies. I don't think that one's going to hurt Google Alphabet a ton. The one that could hurt them is, hey, you have to sell off Google Chrome. That one could be like, hey, wait a second. Now you're taking a fundamental part of the company away from us. That one, I think there's a chance, but not a very high likelihood of that happening. And it could be even worse than that. But my guess is they're going to probably say, hey, we don't want you to pay Apple anymore. We don't want you to pay Samsung anymore. You have to compete on function. And then there was one other thing that I read that they have to make the search data public, what people are searching on, and that way your competitors have an idea of what they should be focused on, which shouldn't be that shouldn't be too harmful to Google Alphabet. Any thoughts on Google and what's going to happen?
I just let that kind of stuff play out. I just watch the price action on Google. I bought in 2 or 3 months ago, and it's been doing really good since then.
Yeah.
And I'm watching the price to see if it hits my stop level. If any of these announcements come out and hit it pretty hard, then I'll reconsider what I'm doing at that point.
Yeah, we'll see how it plays out. Netflix is up, aerospace and defense is up, nice. And looks like some of these specialty industry companies that produce, like, I think GEV produces the turbines that go into power generation. That was looking good. Walmart's having a good day. Looks like some of the semiconductor equipment companies are having a good day. And healthcare J&J is holding its stock. All right,
Yeah,
so it's
J&J is trading at all-time highs right now.
which one?
J&J.
Really? But
They struggled for a while, but they've been hitting all-time highs for a couple of weeks now.
But let's make sure that I'm understanding that, because J&J, look at their 5-year chart. It's like all-time high is not that great.
No.
It's like you're up 18%. Don't celebrate too loud, okay? Like if you were up 180%, okay, applause. Good job over the 5-year, up 180. Instead, over 5 years, you're up 18%. It's like, now J&J is a really respected business, but they were really plagued by some of those lawsuits, and they were big ones.
Exactly.
And their balance sheet's still good, and they don't have any growth. It's not like, oh, they're growing 20% top line. No, they're growing 4%, just a little above inflation. All right, so let me handle a few comments here. Brushy, I understand on China, totally understand. Doomy Trash, good to see you. Looks like Adam, good to see you, Adam. Wants to look at Oscar Health. All right. Talking about Oscar Health is like drinking a good espresso in the morning. It'll really wake you up. So Oscar Health up 268. And this thing, the 5-day, see, that's what 5 days are supposed to look like, right, Daryl? Up 17%.
Yeah, there you go.
That's what I'm talking about. But then you look at the 1 year and it's like, whoa, holy smokes. Can these guys give us a little smoother of a chart? Year to date, this thing's getting the job done, up 28%, and it gives you plenty of entry points, right? It really has volatility. What's the beta on this thing? It's probably like off the charts, right? Beta 1.86. You know, it's going to be a volatile stock. It's a $4.45 billion market cap. I like, I'm not a chart guy. You're the chart guy. But I really like the positioning of Oscar Health. I think a lot of the bad news, like the bad news train for healthcare, is beginning to, get quieter. And that's going to let Oscar flourish, because Oscar has some things the market, I think, really likes. I like growth. Okay, we got growth. They're focused on they're a health insurance company, and they're focused on individuals and small businesses. That's a really good focus. It's a huge market, plenty of organic growth, and big guys like United Health, they're very happy helping big corporations. They're like, we make a lot of money there. We don't want to go to individuals and small businesses. It's a giant pain in the neck. Well, Oscar's trying to get operations that are going to be really, really good for that clientele. And right now, that part of the market's super fragmented. You got 100 companies trying to do it. Well, if Oscar can kind of be the dominant player in the small market, I really like their long-term growth trajectory. Having said that, Oscar's discounted in my book. I am buying more shares. It's a stock that a lot of things can happen with stocks, right? I've had stocks that I thought this one's going to do great. I'm going to wake up 5 years from now, this thing's going to be worth 200, 500% more. And that thing was a dud, right? That definitely can happen. But I can tell you, Oscar's on a list of like maybe 5-10 stocks that I own where I can wake up 5 years from now and I'm sitting on a 5x, return, 10x return if they accomplish what they say they're going to accomplish. It's a discounted stock. I'm buying at a discount. I love their story long term. So Oscar's looking good. And I'm glad that the market's beginning to, cut healthcare a little bit of a break and stop just hammering that industry. What do you think of Oscar?
They're trading about where they were a year ago. And like you said, there's a lot of volatility in there. They are up slightly today after a pretty large increase on Friday. So they're above the 5-day moving average, the 50-day moving average. The 20-day just crossed above the 200-day. They do have positive RSI and positive PPO. They had a bullish crossover in negative territory on August the 6th. The relative strength and relative momentum as compared to the SPX are both positive. A lot of decumulation or steady decumulation distribution over the past year and got a lot worse on about the 30th of June for some reason. The money flow is positive and in bullish territory. They're underperforming the S&P 500, outperforming healthcare by 7.7%. The healthcare provider industry group, they are outperforming, and that group overall is underperforming the S&P 500.
Yeah, it's a volatile stock. It's one of those where we could be up 25% in the month of September on Oscar, maybe even 40, and we can be down 25%. So looks like Mike I think he sold, I think he sold the call option, and he may get his shares called away on Oscar. So hopefully our friend Mike doesn't get hurt in the future here. Cool stuff. So, there was a stock that you and I talked about briefly before we got the live stream going, Novo Nordisk. And looks like Brucey is saying that they're pumping this morning. Can we look at NVO and then CRMD if you, and I can look at CRMD once you're done with NVO.
Okay, so NVO has shown strength over the last 2 weeks. But this downtrend line is pretty hard to get over. It's been in a downtrend since September of last year. Let me pull this back to just 1 year. I think I can see that somewhere about right here. Oops, I don't know what I just did, but pressed a couple of wrong buttons here. Okay, so if I draw downtrend there. It looks like it would need to get to about 62 to show a reversal. And if I move it down to about right here, this is more art than science here. But I'm trying to connect the highs, as many highs as I
Sure.
can across this. If that is the case, then it has broken above that.
So if it gets to 63, you're feeling like, okay, this thing's going to run.
I don't know about run, but it would show a reversal.
Okay.
That it's no longer in a downtrend, because it's been in a steady downtrend for a while. Based on my risk management, I would have sold out a long time ago.
Right. A lot of
Um,
people did, which is
yep,
why the stock's down like 60% from its high, just a
yep.
1-year high. Yeah, I'm with you. It's just, I like making money on great businesses that the market irrationally says NVO growing at 25% with 85% gross margins. What a terrible business. Sell, sell, sell. And I'm like, okay, folks, thanks for the discount. I like businesses that have 85% gross margins growing at 25%. And they're a big company. 25% is big. So I have a kind of smaller position in NVO, and I'm seeing this recent rally as, hey, you know what? I'm gonna buy into NVO. I want to own more shares because I could wake up and this could be the next Netflix. The market hated Netflix for about a year, provided 75% discount from the high, and then Netflix turned itself around and went up 680%. That was a quality business. It was growing top line by 10%. It had all the makings of a really good business. NVO is not going away. People appreciate the drugs they produce. It helps them, and they continue to grow. So NVO is looking good in my book, and I'm going to keep buying shares. Let me take a look at CRMD, and this thing is, geez, this thing kind of breaks the chart machine. It's up 146% over the 1 year. It's up 71% over the year to date. 5-day, it's up 7.5. I mean, it's like really good. Back when it IPO'd, was there a short squeeze or what the heck happened here? But it's settled down and then it's really picked itself up. The growth on this stock is incredible. They've gone into the commercial phase of their drugs. I believe this is a pharma company, biotech company, headquartered in New Jersey. So they have a therapeutic product that helps with certain life-threatening diseases, and it looks like it's being accepted by the medical community, in a lot of respects, and it's really grown fast because they probably just got to the commercial phase of that particular drug. And man, this thing's taking off. It's a $1 billion market cap company that's really taken off. I bought some shares. I bought a nice little starter position, and it had a nice little pullback that allowed for some investing. And I'm just going to watch it a little bit, like, hey, got a little starter position, if it flourishes, great. I can see a nice percentage gain, but this one has run up quite a bit, and I'm not sure how far it's going to go to the upside. But I could say that if I wait for another earnings and then see what they have to say, if there's a substantial pullback, I might buy shares, or I'm going to wait until the earnings are announced and then see what they have to say. And if it's like, hey, these guys are just getting bigger, stronger, faster, better, buy more shares. So that's my plan with CRMD. What are you seeing for CRMD?
Well, most of their growth over the past year was between end of August through the end of October. And since then, it's pretty much flat. So most of that occurred in 2 or 3 months last year. Been pretty volatile this year. It is trading above all of its major averages. Two of them are increasing. The 220-day, the 50-day is declining. They do have positive RSI and positive PPO. Their relative strength and momentum is better than that of the S&P 500. They do have positive money flow at the moment. They've outperformed the S&P by 114%, outperformed the healthcare sector by 173%. They're in pharmaceuticals, and they've outperformed that industry group by 185%. And that group overall has underperformed the SPY by 24.81%.
Yeah, interesting chart. So looks like Shadow Guy bought into Intel, and I don't know. I think that's a pretty good move. I'm trying to get over my resentment towards Intel. I was a stockholder, was surprised over and over again, and I'm like, man, those turkeys. But the CEO that was running the company before is gone. The new CEO is in. They're doing some things that are kind of like completely outside the playbook for corporations, like the whole deal they're doing with the government, where the government's going to take some kind of equity position in Intel. I'm like, wow, don't see that all that often, but Intel's so broken. Why not? Maybe that idea is going to work. The assets that Intel has are very, very valuable. Their PC business is just a huge cash cow if they manage it right. You buy a PC, chances are it has Intel inside. And their server business is very good. They just didn't focus on the right spots, right? They don't really have accelerated computing like NVIDIA. Even AMD is better than they are in the data center with that respect. But maybe they can catch up and they can be part of the overall growth of technology sales. I think that's a pretty good move. Good luck, Shadow Guy. I think it's a wise move. They have had a good month, and year to date, man, look at this chop. Not a bad year to date number. Even
You're
the
not-
1 year.
You're not
Geez.
sharing.
Oh, sorry. Thanks for pointing that out. The 1 year, look at this chop. Jeez, man. This is
It's been a painful ride.
this is like a heart attack AKG, that they show at the hospital. Oh no, the patient's got, their heart's not in a good place. But overall, I mean, Intel's just been and these businesses, are tricky because it's not that the markets hated them. It's like Intel made some decisions that were like the wrong decision. They picked the wrong side. Like they wanted to build their own foundries to do semiconductors. And back when they made that decision, I don't know, 4 or 5 years ago, and really historically, they've had their own foundries. They wanted to kind of become a TSM, so to speak, but that they didn't pull it off. It didn't happen as quickly and successfully as they would have liked. So that was a bad decision. Back then, they should have focused on accelerated computing. Then they could have maybe have a little bit of that data center revenue, but they didn't. And here we are. So, but good luck, Shadow Guy. This thing could really go places.
That's a hard thing for corporations to change because CPUs were their bread and butter. And, getting into a different technology is really a struggle for companies. Sometimes Motorola ran into that. GM run into that. So it's difficult to shift that mindset in not NVIDIA. I can't think of the
Intel.
company right now. Yeah. It's just been a struggle for some of these companies to change their mindset.
Yeah, especially like Intel was NVIDIA 20 years ago. It was the big 8,000-pound gorilla that everybody feared. And I think part of the culture is maybe their pride is, oh, we're Intel. We got to do things better than everybody else kind of attitude, rather than having a little bit of a humble kind of approach and saying, what's the market telling us? Are we on
Yeah.
the right path? Like, hey, no, the market's telling you don't focus on those foundries. Everybody wants GPUs, and maybe they could have caught themselves 3 years ago and built a GPU that had some type of workload ability and been more competitive. So I think that's part of the recipe, or the situation that's hard to pull away from, is people are bought in the corporate culture that sometimes has anchors on, hey, we used to be so great 20 years ago. It's like, yeah, that was 20 years ago. So good luck. It looks like Sam wants to look at BMY.L, Bloomsbury Publishing. BMY.L. I bet you didn't think you were going to cover this stock today, Daryl, on the live stream.
No.
Okay. Bloomsbury. Where's Bloomsbury? Bloomsbury Publishing in London. All right. So these guys, we're going to look at this stock. It's in the British pound. And a British pound is worth $1.35. So so when we look at this market cap, we're looking at $520, $530 million market cap. Revenues are, less than 2 times sales. P ratio 16. Forward P is 13. Okay. The stock for the year to date's down quite a bit. 31. Now, high level, wow, look at that 5-year. This is done really well. I want to look at their website. Now, publishing businesses have been run over by technology. If you looked at a publishing business 50 years ago, we couldn't get enough books. We couldn't get enough magazines. Maybe 40 years ago, it was like an industry that had a lot of addressable markets. And nowadays it's completely run over by technology, websites, AI. It's like, it's just like you don't have as big of a need for books and published materials. So that's a little bit of kind of like the very high level, is this a good business? So it looks like they are still into books. Now, is this going to be, kind of like, hey, we're going to be the last company standing, and we know the market's limited, but if we can do a great job, we can dominate this market and have a good return for investors. Maybe. And are they like a website, or are they a publisher? So books, authors, discover. So they might be more of a website for people that are really into published materials. Looks like you're getting a little bit of like Spotify, a little bit online. Okay. So that's who they are. Okay. All right. So let's look at their growth. They've been growing. Wow, pretty good growth. Maybe COVID helped them. Everybody was sitting at home. Hey, tired of looking at a screen. Can you get me a book? And what's been cool is I can give credit to my wife for this. Is my 21 and 25-year-olds, they're avid readers. Like they read books like no, we went on a trip and they bring books and they read these books and it's really cool to see, and they're young. And I'm like, hey, that's really great. My wife got them to read it when they were little. And maybe a lot of people like reading the good old, hard, hardback, softbound books because it's a breakaway from your computer. These guys are growing their business. Their growth is slowing down, and they actually had a bad quarter. They report twice a year, semi-annual. So they had a bad half recently reported. So that is a little bit of a concern. This is what's going. That's a pretty good little drop there. And the half before they grew at 32% in 2024, but not looking good for the most recent half of growth. Free cash flow, 40 million pounds. Gross margins are very good for this type of business, 56%. They are profitable. Okay. And just to take a look at their balance sheet and make sure they don't have a ton of debt. Nope, they have more cash than debt. Very good. So this business is it's worth 404 million pounds. I would say it's fairly priced. And I think me looking at this investment, what do I think is going to happen, right? I think these guys are going to go sideways. I don't think they're going to double their revenues in the next 5 years. I don't think they're going to double their revenues in the next 10 years. And I don't know that this stock's going to flourish because they're in an industry that's just been run over by technology and kind of left for dead. It's sad, but it's reality. It's like, hey, everything's online now. And these guys could have a market. They definitely can. But it'll be a limited market. And their fundamentals show that the company's fairly priced. It might be priced at a small discount. It may be priced at a small premium, but nothing. Their dividend's pretty good. If you're a dividend investor, this is a pretty good idea. The business is probably going to hang on for the next 10 years because I think books will always be something that, like I was saying, I have 21, 25-year-olds. Those guys buy far more books than I do. And that's really good to see that, hey, they still appreciate that media. So that's going to keep companies like this around. And collecting that 3% dividend, if you're an older investor, this might be a really good idea. So that's Bloomsbury Publishing. What do you think about that one, Daryl?
I was just looking at the chart and it doesn't look really all that exciting to me. They're definitely in a downtrend for the last year or so. They did move into positive RSI territory. They're in negative PPO territory, underperforming the S&P 500. They have some distribution after a lot of accumulation back in December of last year. Money flow is barely positive, and we don't have a lot of data for industry groups and what have you. It doesn't look like it's picking that up, but they're underperforming the S&P by 16% this year. Not terribly exciting to me.
Yeah. These comments shouldn't come to it as a surprise. It's, the publishing businesses have, they had a historic past like 100 years ago, 50 years ago, but nowadays it's really moved online. So there's a question out here. Thanks for asking, by the way, Sam. Great to see you. It looks like a little smack talking online here. On Shadow Guy, just a little fun out there. Shadow Guy saying that he posted a video on Intel in the Discord covering how NVIDIA is being pushed to use Intel's foundries. You know, that the story I heard about Intel and the lack of interest in their foundries is Intel created a lot of enemies in its past. Uh, Intel had a CEO that I think one of his famous expressions was only the not not the scared survive, but only the paranoid survive. He was always treating everybody as like a feared enemy, and including all the other semiconductor companies. So they really were hostile towards their competitors. And I don't think the other competitors have forgotten that. They're like, you know what? You ran us over and left us for dead 10 years ago. Screw you. We're not going to use your foundry. You kidding me? And Intel created a lot of bad enemies in the industry. And when they were like the 8,000-pound gorilla, they were like, whatever, we don't care. And now it's like, oops, I guess we made our bed and now we need to sleep in it. Little J. Okay, this is a question for you.
Okay.
Hi, you both. Can Daryl please tell where he goes to see implied move for options?
Okay, there's a lot of different places you can go, but I'm going to show you how I do it on stock charts. So I just calculated the implied move for NVIDIA for my video that I posted this morning, which was 6.9%. So let me tell you how I got there. It may have changed since I did that, but you look at if you're looking at earnings implied move, you look at the closest expiration to the earnings date. So they report on August the 27th, and the nearest expiration is August the 29th. So then you have an options chain that I can scroll through, and they're currently trading on the options chain. The split between in the money and out of the money is right at 180. So you take this value for the puts, and that's 713. So I'm whipping out my calculator here. Taking 713 and I'm adding that to this mid value, 497. Together, that is $12.10. And then you divide that by the price here, which is 180, and multiply it by 100 to get a percentage. So over the weekend, when I calculated this, it was 6.9%. And at this very moment, it's 6.72%. So you can do this just about on any platform. I just use stock charts because that's what I'm on 90% of the day. So that makes sense. Take the mid price for the puts, add it to the mid price for the calls, and divide it by the strike price.
Excellent. Thank you. All right. So, oops. I was updating a formula and I made an error. All right. So good stuff. Looks like Brucey is looking at RKLB and it's flourishing. Rocket Labs. Man, I love the story of Rocket Labs.
They launched their 70th. Which mission was it?
So where's my NASA hat? I'm gonna have to switch hats on you guys because I love space. And I love space. I'm a fan of space, but I don't like space companies. That's my bias. And I'll just put it out there that the things I don't like about space is they just don't deliver margins. And it's typically because it's cost plus. It's A lot of these things can go wrong. I had a client in my software days. They launched satellites into space, and these satellites were used. Uh, the military used them for communications, and they have recently gone to a consumer-based um, product where people in remote areas can have high-speed internet. Right, that's the concept. And FYI, they came out with that concept before SpaceX and others that now are offering that type of service. Well, here's the problem that they had is they launched a satellite into space that cost them $600 million. That was a lot of money to them. This company was when that happened, they were like $20 billion market cap, $30 billion market cap. These guys had been around for 20 years, successful. That darn satellite didn't work. It didn't turn on, and there was some kind of malfunction. Well, you can't call AAA. It's like you're done. Write off 600 million. Not only that, it postponed revenues they were expecting from that satellite. So it was just like when you're dealing with space, really smart people like that client I'm talking about that I had, things can go wrong. Um, you know, space shuttles can blow up and so forth. So that's a risk element. So you're not making a lot of money. You have risk. What if Rocket Labs, two of their rockets explode on launch in a row, and they become like an undesirable launcher? You're done. So it's not my investment. It's somebody else's. Congratulations. If you invested in this thing, you took a rocket ship ride up 578%. This is one of the stocks that I get asked about a lot because, like me, people are fans of space. That's great. It's awesome what they're doing. And the story behind Rocket Labs, I believe this is the company that was founded by a guy in New Zealand, didn't go to college, but really became, obviously he was very talented, but he became a big space fan, and he built his own designs. He would launch his own rockets as a kid in rural New Zealand, and he brought his ideas to the U.S. and nobody would touch his company except for one investor who ended up owning a good part of Rocket Labs. The whole story is documented. There's a really good documentary on the space companies that are coming out. And most of those space companies they covered in that documentary that's like 5 years old are bankrupt. So that's just my point of view. I continue to be a fan of this company. If I met the CEO of this company, I would think he's a genius. That's awesome. I just don't want to be I don't want to be a stockholder because I think there's high risk and not enough money to be made when you look at their P&L. So what do you think of Rocket Lab?
Yeah, so they did launch their 70th Electron mission today. Or, I don't know, this is August 25th. It probably was today, actually. No, it was 23rd. Okay, so that was news. That's probably what's driving the price today. This will be their third day, trading from just slightly over 40 up to 47. So they're having a good 3 days here. You have a positive RSI. The PPO is also positive, and it looks like we're getting ready to have a bullish crossover if this price action continues. Money flow is negative. They are outperforming the S&P by just 498%. They're outperforming the industrial group by 472%. Outperforming aerospace industry group by 390, and the aerospace group is outperforming by 21. So I played with this one. This is not typically an investment that I would make. And they don't pay a dividend. It is a little risky, but I could probably go find my NASA hat as well. So I enjoy its space and everything related. I posted a video Sunday a week ago because I happened to catch the space station flying over my house, and it was in line with Venus and Jupiter. So I took about a 1-minute video watching that transverse the morning sky along with the Jupiter and Venus in view. So I like that kind of stuff.
Oh, I love this kind of stuff.
Yep. I've had about 7 trades. All of them are winning trades. It's only 20 shares. It's not like I put a whole lot into this, but they're all winning trades at the point with a total gain of $493 or 27% or so.
What was that American movie of the kid that grew up in West Virginia and he became a rocketeer?
Exactly. What's that called? I know exactly what you're talking about.
It was a great movie. Love the movie.
Rocket Man, I think, isn't it?
Maybe.
Yeah.
Well, this story is similar to that. This guy did not go to university, did not become an aerospace engineer. He grew up in rural New Zealand, in the middle of nowhere, but he loved rockets. He started making them on his own as a young person, as a kid, and he got it. He was like, he kind of went through a trial and error kind of, journey and created rockets that really work, very practical rockets. And I just love his story. I love space. I was in Houston this summer and went to the Space Center, and I just marveled at the giant Mercury. Is it the Mercury rocket? No, the Saturn rocket.
Saturn rocket. Yep.
And how big that rocket is, and that thing would launch a tiny capsule into space, but the amount of fuel that they would put in that rocket, it's quite incredible once you get behind. I think it had 6 engines, and each engine has a diameter of like 30 feet. Incredible. So big fan of space, but I don't invest with my heart all the time. I invest with my brain. There's a lot of things that I think are super cool, but I don't invest in them. Like the movie business, it's come and gone. Movie businesses are a great place to lose money. And other businesses are really neat, but they're big money losers. All right, so let's kind of start. Let's start landing the plane here. I guess landing the spaceship. So great question on Rocket Labs, boy. You got us. You got me in a positive mood on a Monday, Brushy. Thank you, and thank you, Sam, for attending, asking questions. Appreciate it. Little J, good to see you. Thanks for the questions. All right. So Little Wayne, you live in Houston. Awesome. I had a nice trip to Houston this past summer. We spent a few days, went to see a ball game, see the Houston Astros play, and very comfortable air-conditioned stadium. Man, I can get used to that. Great fans, great food in Houston. It was just a great trip to Houston. The one thing that I'm a Californian, and here when we don't get rain, we don't get weather, and I had to drive through storms to go from San Antonio to Houston, and man, those storms are really powerful. Hey, blocks for fun. Good to see you. Hopefully you're having a very nice day. And Houston, we have a problem. Yeah, and Houston was awesome. And what's the other thing we did there? So anyway, it was a good trip, and state of Texas has a lot of cool things to see, by the way. All right, so coming back to the stock market, looks like Google. Look at that. Maybe some, you know, I get a lot of messages, when I post super investor content, like, hey, this super investor is doing this and that. I get a lot of messages that, hey, what about these politicians? They're killing the market. They're doing so well. I'm like, well, I'm not going to cover a politician because they're not a super investor. They're investing probably on information they have, and they can legally do insider trading, which is illegal for everybody else.
Yep.
And back to Google, maybe some of those politicians know what the outcome is going to be of that court situation, and they're buying into Google. Maybe, who knows? Just I've started to think about all those comments I get on my super investor videos. Netflix is up, Apple's up. Just a couple of stocks are up, but what's the market doing as a whole? So not too bad. NASDAQ's even.
Communication services is the only sector in the green at the moment.
Yeah, you can thank Google Alphabet.
Yep.
And Meta's pretty much even. So those are the two. That's a majority of the market cap of communication services. And Netflix is up. So that's looking good. All right. So looks like Blocks for Fun has a question here. You trimmed ALAB. I can understand. Oh, man. Beautiful. Man, I love ALAB and I love Reddit stock.
Looks like
so
Google
ALAB,
just moved to an all-time high, Victor.
all time.
Yeah, I think so.
Excellent. So
Yeah.
this stock here, ALAB, which is Astera Labs, it presented us a really nice opportunity to buy and then get on the elevator up to the third floor on this one, because you would have tripled your money up to 178. Looks like Blocks for Fun is trimming his ALAB position. I'm doing the same thing, taking some profits, because this is just it's too much too fast, and it's now over its intrinsic value. So hey, it's been a great stock. Just going to take some capital off the market, out of the market. So the other one is Reddit. Reddit's done great, but it's had a couple miserable days. But Reddit, the market knocked on our door. It's just like ALAB. It was knocking, saying, hey, is anybody home? I'd like to offer you a really nice discount. And some investors answered and said, yeah, Reddit, cool. And it went up nicely. You would have doubled your money if you would have answered that door back in May and bought into Reddit. So this one's doing great. Now, I'm not selling any Reddit shares because I can't argue with somebody taking profits. Great. Ring the cash register. Awesome. But I feel like Reddit's just going to continue to get bigger and bigger and bigger and bigger. 10 years from now, it's going to be much bigger. So I'd like to hold my shares, even though I think it's priced too high. So, and I own a lot more ALAB than I own of Reddit. So that's another factor. So I'm trimming back a third of my ALAB position, taking profit on it and keeping the rest. And then Reddit, I'm just holding it and hoping that this pullback is just because it just went up too much. And now it's beginning to go up today. So it looks good. But nicely done, Blocks for Fun. Nicely done, sir. All right. So I think I covered.
Let me show a quick chart on Google.
All right. Are you a Google stockholder?
Yes.
All right.
I
like you.
I bought in a couple months ago. I'm up 23%.
Good for
So
you.
remember last week we talked about hammers and shooting stars, candlestick patterns.
Yep.
This was a hammer that indicates some type of reversal may be in play over the next few days or short term. And you can see how that is played out. So it's just confirmation that watching those kinds of patterns is something that is useful to have in your toolbox here. We talked about this being a potential reversal. When was it? Friday or Thursday? I don't remember. Last Thursday.
I remember.
We covered several of these charts. So anyway, just kind of confirmation that the technicals sometimes play in your favor.
Yeah, very good.
And we're
I
at an
think,
all-time high. We
yeah.
just passed an all-time high.
So the stories on Google is what's held the stock back. The stories are they behind on the AI front? Okay. That's a story, but when you study the facts, it's like, I don't believe they're behind. Gemini's pretty darn strong. You're dealing with a company that has tens of billions of dollars they're deploying into AI. They have a very strong cloud business. It's like, okay, the story doesn't match the facts. It's somewhat very far from the facts. So the other thing was, is AI going to disrupt search? And search in the last earnings grew. So it's not like disrupting it yet. Is it going to change search? I think so. I think it'll change it. But Google also has the chance to reinvent search. And actually, through search is where they're introducing Gemini. So think of all the users are getting on Gemini AI from Google Alphabet, because people are going to search like me and the rest of the world, and they're being presented with Gemini. Their YouTube business is the fastest growing streaming platform on earth. It's growing faster than Netflix, and it's bigger. It's growing at a faster percentage rate. Well, that means that they're going to continue to get further and further ahead of the rest of the world in streaming. Their Waymo business is number one. So it's like, I could just, I hear the stories. And one of the things that I love about stock investing is you hear a story and you rationalize it. And sometimes you're like, I think that story's wrong. And you put in your forensic accounting hat on, or your whatever analysis hat on, and you get to work, and you start, validating if that story's correct or incorrect, if you're a believer, a non-believer, and so forth. And Google Alphabet has certainly given us the opportunity to have that journey of, do you think Google Alphabet is gonna be hurt or helped by AI? Is it going to hurt it more or help it more? I think it's going to help it more. I think Google Alphabet, not the first time I'm ever going to say this, I've said it many times, this will be the most valuable company traded on the stock market in the next 5 years. That's my feeling on it. I think it's that strategically strong. Every business is strong, and they have the capital to do it. They have the intellect to do it. That's where I'm at with Google Alphabet. It's up 1.44. Had a nice 5-day run. Thought it'd be up higher, but I think last week, the first 4 days last week, Monday through Thursday, it was kind of crummy, and then Friday was great. So I think last week we were probably even overall. All right, sir. Well, I'm going to need to get going on my side. Once again, great stream, Daryl. Thank you, sir, for all you do. And we are going to stream quite a bit this week. Daryl and I are going to get together again on Wednesday morning, same time, Thursday morning, same time, Friday morning. Additionally, on Wednesday during the NVIDIA earnings, right at 4 p.m. Eastern, we're doing a watch party. So, if you want to take a look at the earnings with us, we are going to grab those earnings as soon as they're dropped. We're going to see where the company landed on revenue growth, what's causing revenue or contraction thereof revenue. Look at fundamentals, try to assess, what are we seeing, and see what the market's reaction is, and kind of just cover that for maybe an hour. There's other stocks that are being announced too, by the way. CrowdStrike's announcing on the same day, and other stocks are going to be interesting. But, the big focal point will be NVIDIA if you want to join us on Wednesday. With that,
NVIDIA is also up today, and they are also off of a hammer that we looked at last Thursday. So that's some good news as far as NVIDIA.
There we go.
Yeah, their relative strength would be increasing based on the price action today.
Man, incredible. The biggest company keeps getting bigger. All right. Well, have a good day, Daryl. Thanks for everything.
Victor. I appreciate you inviting me.
You're welcome. Everybody, have a good day. We'll see you guys.
Thank you, everyone.